The question for today is how important it is to check the yield curve and economic view before investing. Mr. Satish Prabhu, can you elaborate on this?
If you're talking about equity investing, I wouldn't say, because equity is a long-term investing cycle. So macroeconomics may not play a significant role while it adds to the returns if the cycle is doing well. But to decide on the timing, maybe not. But if you're looking at fixed income investing, then yes, because you need to check whether you're at the upper end of the yield curve or you're at the lower end of the yield curve. Because if the yields are expected to fall, then you can be in a duration product. And if the yields are expected to rise, you can be in a short-term fixed income product. So it helps if you're investing in a debt-oriented fund, but maybe not so much when you're investing in an equity-oriented fund, because short-term trends do not, they may impact sentiments, but they do not decide the long-term return.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.